I'll try and keep that light that's shining behind my head out of the road. Welcome, Eric. Thanks for sort of kicking off our Waxing Lyrical series. Just before we go, can everybody just make sure if they're not talking, just to mute in the background? I can hear some noise coming through. It'll just make it a little bit difficult. So if we could all just mute once Eric starts, and if you've got any questions, there is an area where you can log in and put a question through. Yeah, Eric, thanks for kicking off our Waxing Lyrical series. So we sort of looked at this as a bit of an idea of, it came from, some of the stuff we did during COVID, where we got online and tried to explain to everybody, what was happening with government incentives, etc. And it worked quite well. So we're trying to use this as a way of keeping everybody in contact with each other and to continue to keep the information flowing, and I guess have something that's a little bit different to reading newsletters that we set out and various other information. And just on that fact, I'd really like to thank the executive, Doug and Fiona, enormously for the amount of work that they've done in putting out information on a very regular basis. It's quite a frustrating process getting the information in the first place and ensure it's accurate and then get it out. So thanks to them. Just Eric, a couple of things in terms of what's happening in Australia that I just mentioned as we first came on is, state by state, the premiers, our equivalent of your governors, have a very strong control over what happens in that state. So if you look at Australia at the moment, really Queensland, Northern Territory, Tassie and WA, and sort of South Australia are operating in one way, and Victoria and New South Wales in particular, and that includes the ACT, are operating in a completely other way. So, and really the population is in New South Wales and Victoria, and also most of the economy is in those two states as well. They tend to be the services states, particularly Victoria, as opposed to the other states, which are more manufacturing, and manufacturing has been allowed to run. And when I say manufacturing for us, really it's mining. So Queensland and NT and WA, and to a degree South Australia, are running off the mining game, and they've been managed to keep mining running the entire time. And in fact, construction's run all of the time as well, in pretty much everywhere, apart from it's got shut down recently in New South Wales. So that's created this difference across the country between how we're going. So from a WA point of view, we've hardly missed a beat. In fact, the sales have been very strong. We've had great weather, and everything's been going swimmingly. Completely different story in Victoria, where they're constantly being shut down and stopped. So it's quite a diverse situation across Australia. I'm sure it's pretty similar in the US from what I've read. The last time we were all able to get together was at a state meeting in Queensland a month or so ago. And beyond that, we've we've tried a couple of times to get our rinse meetings going, and have had to stop them at the last moment because we just couldn't travel. So really the interstate travel is almost, it's very difficult depending on which state you're hopping from, and there's potential of a 14-day quarantine when you get back, particularly for, say, us living in WA coming home. Our premiers will lock it down at any moment. So other than that, the market's strong, but it's very patchy as well. So that's our sort of current situation. So it'd be great to hear from you about the US. And again, thanks for kicking off our Waxing Lyrical series, and I'll hand it over to you to crack on. Cheers.
Thank you so much, Neil, and good to see all of you. It's really good to see all of you, by the way. Most of our staff has been working, like Doug and Fiona have, entirely remotely. Obviously, travel's been hard the last year and a half, so no one likes these things, but I'm happy to have any chance to see people. So thanks for making time and inviting me to be a part of this, and I look forward to the next time we're all together. So I'm gonna run through some slides I prepared. I'll share my screen here in a sec, and then I do have time at the end. I think, Doug, we can just do open Q&A if that's right. I mean, if people want to type in their questions, that's fine, but also at the end, I'm at your disposal. Let me just give you a quick level set a little bit on the US first, like where we are today, particularly in the context of pandemic. So essentially, the US is back to normal operations. The only place where really you consistently will see the remnants of pandemic, for now, by the way, we know that can change, is any federally controlled transportation networks, right? So trains and airplanes, you still have to mask up. but especially for car washes, for car wash manufacturers, for customers, you do see masks for those who are being very cautious, but the days of government mandates are essentially gone. And I live in one of the blue states, the more liberal / conservative when it came to pandemic of Illinois, outside Chicago. And here in Chicago, even, we're pretty much operating fully back to normal as much as people feel comfortable operating. So that's the good news. The other thing I'll say as I get through this summary of the U.S. market, if you're not familiar with the US, a lot of what I'm going to say is totally oriented toward the tunnel market. And that is not to do an intentional slight or disrespect to those who are the self-serve or the rollover automatic operators. It's just when you're talking about the US market, the last 10 years, at least, certainly right now, it is the tunnel game. I mean, that's just where all the new construction's happening, all the sales, all of the activity, new development is in that segment, and particularly the express exterior model that I know most of you are probably familiar with. So I'm happy to, questions on the side or at the end about those other segments, I'm happy to provide, but I want to give you that heads up in advance. So let me go ahead here, and I'm going to get started on just giving you a little bit of a launch here. Okay, so the first thing when it comes to mind, and I thought this was, by the way, a nice, I don't know, sort of a literary compliment to this waxing lyrical thought. I pulled out a famous and favorite Hemingway quote, and he had this quote about gradually then suddenly. You might have heard this in terms of bankruptcy a lot, right? One guy asks another, how did you go bankrupt? And the answer was, well, slowly at first, and then all of a sudden. And it's a little bit the same way with the car wash industry, but in the inverse economically. I mean, the industry, as I'll talk about here in a second, was making sort of slow and what seemed like regular and rhythmic evolution, and it has exploded. Exploded like no one has ever seen. And I probably said that to you 18 months ago or 2 years ago, and I was right then. It's even more pronounced now. It's really unbelievable. And I will tell you too, a lot of the information that I'll be sharing, it's already out of date. And I just did this presentation yesterday. I mean, it's literally that fast in terms of acquisitions and mergers in particular. So just so much activity going on. But this is what I mean by the gradual. If I go back even to the mid 90s and think about the car wash industry, I mean, there was very little. I mean, of course, companies came and companies went, but amongst the major players, there were really very few, the merger and acquisition segment. I mean, so in 97, PDQ was acquired. They're still owned by a company called Dover. That's been around for, we've known about that for quite a while. Back in 2012, Coleman Hanna was acquired by Ed O'Hanrahan, who had Galloway Chemical. That's a marriage that still continues to this day, as does the 2013 one of McNeil and Ryko. But really, particularly on the retail side, there was very few purchases of existing car washes. I mean, it happened. It happened when someone wanted to retire. It didn't happen speculatively. And most of those sales before this recent period were, of course, really just between private individuals, right? You wanted to move on. Your kids didn't want the business, and so you tried to find another operator. Oftentimes, banks either wouldn't finance it, or anybody in sort of the capital markets, call it, like finance firms, didn't want to own car washes because they'd been too often sort of burned by limited experiences. They weren't familiar with how the industry was evolving with the express exterior. So they were, for example, thinking a lot about full service car washes and all the complexity of managing labor with weather and all those things. So there just wasn't a lot happening until recently. So I'm going to go give you, this will take a little bit, and I'm going to walk through these different pieces of data on the screen. But I would say in general, there were two big early transactions that were sort of bellwethers. One was in 2014 was when Mr. Car Wash, which is still the largest retail chain in the US, they were their ownership transferred from OnCap to Leonard Green Partners. And why that was a big deal was the Leonard Green transaction, when they were purchased, was one of the first and certainly the most high profile transaction that had some level of reporting around it by a major investment bank, private equity group. So Leonard Green was the size of a company and a deal maker that got people's attention. So in 2014, you had this, that's interesting. They're in the car wash business. Why is that? And so, ears begin to perk up. The second one was in 2017 when Sonny's, a car wash manufacturer, was acquired by Sentinel Partners. And so that was a major, obviously on the supplier side, Sonny's being the largest conveyor supplier in the US of conveyor parts and equipment. That started getting a lot of attention, just given their, their visibility. So that set off sort of a prairie fire of activity. And let me talk about a few of these things, what they are. So first of all, on the left-hand side here, you can see some statistics. This is actually out of the association's own statistics. Like I said, I'm sure it's out of date since I just put it together yesterday, but we track about, it says here, 27 companies that are consolidators. So these are largely private equity backed, aggressively, actively going out trying to buy car washes more than build them. So if we went back to 2013, 2014, there's really only one, which is Mr. Car Wash, which back then might have had 150, 200 locations, or 150-ish locations. Now there's 26 others, and that's certainly on the lower end. I'm sure we're missing some that have, approaching 1,600 locations under ownership. The second one down there is we just track. There used to be a time when if you owned 5 or more retail car washes, so this would not include petrol. This does not include convenience stores. These would be independent car washes. There was a time when if you owned 5 car washes, that was considered a pretty large operator. Like back when I started in 2006, that put you on the radar pretty quickly. The top 50 list in the US, the top 50 car wash chains back in 2014 had 6 stores. Now there's 305 companies that have 5 or more stores representing 4,400 locations. Again, that just wasn't the case just a short time ago. And then finally, by contrast, you can see, we right now track on, call it 800 operating companies that only have 1 store, which obviously 800 stores, 800 companies, 1 for 1. But it gives you a sense of how much growth and just how much the market has shifted from what was when I started with ICA in 2006. Very much the prototype was 1, 2, or 3 store owner operators. If you went to the trade show and met people, and if you had 5, 6, or 7, that was a big deal. And then there was this outlier of Mr. Car Wash. Well, that dynamic has changed dramatically. So on the right-hand side, these statistics here give you a little more illustration of that. So 2014, right when that transaction occurred, Mr. Car Wash, which again remains the largest in the US at 134 stores. In 2020, they ended the year around 340. I mentioned before that the 50th store in the top 50 list. So by the way, to give credit, there's the Professional Car Washing and Detailing magazine has been doing their top 50 list for years. In 2014, if you had 6, you made the list. Now it's at least doubled. You have to have 12 to make the list, and the top end is off the charts, as you can see by the bottom here. So in 2014, all of those 50 stores together were 894, and now it's at 2,000. So the numbers have just accelerated toward this consolidation concept. So, some of the sort of big topics and big energy and big thinking right now is around this idea that we know from an industry sizing study we did in 2019 that there were about 20,000 tunnels in the US, automated conveyorized car washes. In the early 2000s to the 2010s, certainly 2011, maybe even 2012, 2013 range, if the industry was doing 400 or 500 new tunnels or reloads a year, that would be a really good year for the industry, with sort of the conventional thinking, conventional wisdom. I'm certain we're more like 1,000 new constructions a year we're running right now, certainly in 2020 and this year. I mean, there was a little bit of pause last year because of some of the lockdowns in 2020, but we more than made up for that in the second half of the year. It is at least two times plus what we were running in terms of new construction. And also, as the yellow box speaks to, and you saw this alluded to in the previous slide, I mean, it's these top 50 chains that are growing the most. Now, most of that is through acquisition. The largest groups are starting to get more into greenfield development now, and we'll talk about, why in a second, but largely, those largest chains are growing relatively fastest and doing it predominantly through acquisition. So right now there are somewhere in the neighborhood of, I say here, 50. I've thought 40 to 50. Some people might have a number higher than that, but groups that are actively in the industry. What I mean by that is they already own a group of car washes, or they're already actively in negotiation to try to buy groups of car washes. Again, 10 years ago, that number could be counted on one hand. And finally, the green one there, and I'll come back to this at the very end, is this idea of, well, wait a second. I mean, how many of these tunnels can you put into this country, for crying out loud? And we hear this question about, is there going to be saturation? Is there going to be overdevelopment? And certainly, number one, overdevelopment can happen, no doubt. And number two, no matter what the academic definition may be, if a tunnel goes in across the street from you, it's now overbuilt. So, there's eye of the beholder is also a big part of this as well. But generally speaking, I think probably the conventional wisdom is now that we're in the US here, the industry is racing toward 30, maybe 40,000 locations of conveyorized car washes, that there is that much interest and belief that we're still in the early innings of this, that new construction is accelerating. So a lot of the consolidators, in fact, a lot of their now energy is going into more of the greenfield development than just the acquisition side. And some of that's driven by economics, of course. So on the supplier side, what you've seen is, again, a lot of top line growth because of just all the new development and all the new construction and all the cars being washed. We'll talk about the retail activity in a second, but what the end result of that too has been a lot of consolidation on the supplier side. So really in the US, you're seeing what's becoming three major multi-equipment, multi-service providing platforms, I would call them. Sonny's in the conveyor side, and of the three here, Sonny's would be the largest overall in gross revenues. And you can see all of the words below the logo are acquisitions that have largely happened in just the last handful of years. So under Sonny's, Autovac was a vacuum distributor acquired this year. Diamond Shine Chemistry acquired less than 24 months ago. Mr. Foamer Signage, Pico, they bought another equipment manufacturer in Detroit. Scotch-Platt, another chemical manufacturer, and Slam is a car wash marketing specialist firm. So they provide services and design for marketing. And then under NCS, which, if you're following along, NCS is the old Ryco. So that's it started as the Ryco product line. Ryco still exists as a product line, but now the banner company is NCS, National Car Wash Solutions. Under them, they most recently have completed the purchase of Carolina Pride, which is a self-serve in-bay supplier, generally, which fits with certainly the heritage of NCS. CSI was probably the number 2 chemical player in the US. McNeil, of course, is a Canadian tunnel manufacturer. TSS is their signage solution, and Vacutech, of course, as you might guess, is a vacuum manufacturer. And then OPW, we referenced these earlier on. PDQ was an acquisition of theirs, what seems like 100 years ago, back in '97. But recently, it was joined by Bellinger just less than 18 months ago. And then ICS, the payment solutions company, was acquired by them as well, all under the Dover brand. So again, not that there aren't other acquisitions and stuff happening outside of these platforms, but you're really seeing the emergence of these three major powers who are all trying to assemble a one-stop shop for their customers. And what's not displayed here is, because there'd be too many of them, and I'll be honest with you, I can't keep track of this stuff anymore. I mean, there's just too many of them, would be on the distribution side, the number of independent distributors that are being purchased by these companies. So NCS already had sort of a direct service model that was part of what, again, their heritage, so to speak. But Sonny's and NCS, where it makes sense for the tunnel customer in particular, and Bellinger, now that OPW has a full line or a fuller line, distributors are being acquired all the time. So almost all of these firms now service the majority of the market direct. And there's the ramifications of that, of course, then are on those companies that aren't on this platform, because that puts a challenge to, well, how do I go to market? If independent distribution is being purchased by these three platforms, and let's say I am chemical company AYZ or equipment manufacturer XYP, how do I go to market if my distributor just got bought? So it's creating a lot of angst and anxiety and activity in other competitors who aren't in these platforms to find ways to service the market. Okay, so what I'm showing you here is a website from Commercial Plus, is a in the car wash space, is in the financing side. In fact, you can find this list at cptop100.com, cptop100.com. And so they try to track all of the acquisitions on the retail side, but I just pulled off the top 22 here to give you a sense of what it's looking like, at least as far as they're reporting today. So you see Mr. Car Wash, of course, in the top. We've said them, 344. Driven Brands is the heritage of that company is IMO out of Europe. And of course, IMO is in Australia as well. They've now had a couple of transactions. They're under the Driven Brands, which is now a publicly traded company under that name, which includes a lot of other automotive service industries and businesses. Car washes is maybe less than a third of their portfolio, whereas car washing is 100% of Mr. Car Wash. Zips, again, private equity involved. Quick Quack, private equity involved. Autobell, still privately held by the family. Number 6 is interesting. Tommy's Express. This is a franchise model. So Tommy's is unique in that there's only been a few number of franchise attempts in the US. My opinion, or arguably you would say that none of them almost got much traction yet, or at least much more than modest traction. The Tommy's Express model is unique in that, they're up to 66 now franchisees operating car washes across the US. And so that's notable just because of how unique they are. Number 7 is Mammoth Holdings, private equity. Number 8, Tidal Wave, we'll talk about in a second, private equity. Number 9, True Blue, private equity. And number 10, I believe Golden Nozzle has a private equity backer. So again, if you went back in time 7-8 years ago, you might only have one private equity backed. So here's some of the more notable transactions, and these have all just happened this calendar year. So I mentioned to you a moment ago, Tidal Wave, and that was sort of the first big one, because it approached $1 billion. And that was the first time we had seen, at least reported wildly. I'm sure that was the first time we got close to that number. But Tidal Wave was also interesting because, and by the way, Golden Gate was the private equity firm that invested in Tidal Wave. What was noticeable about Tidal Wave is if, this is again a private transaction, so this isn't stuff that's necessarily reported, but as I understand it, quote, a lot of that valuation was based upon future stores that were in development, that weren't even operating washing cars yet. So it gave everyone sort of this, oh my goodness, people are paying for car washes not yet running yet, because it was an indication of the appetite for car wash investment in the US. The second one was back in June, notable, I mean, historic for the industry was the Mr. Car Wash IPO, which now trades New York Stock Exchange, MCW. This is the first, it's the first certainly pure play car wash publicly traded company in the world of note. I mean, there may be some off, some trading on some exchange somewhere that's less notable perhaps, but Mr. Car Wash is notable for that reason. And, they closed their first day with a $5 billion valuation on those 350-ish car washes in their portfolio. And then the recent one that just happened this month was DRB Systems. So another car wash point of sale company was just acquired by Vontier. I believe that's pronounced Vontier, which is also the parent company of, some of you might know of, Gilbarco, which is in the gas station petrol, the pump world. So that there's some synergy there in the context of, them understanding payment solutions with automotive and convenience and retail gasoline, petrol. What was noticeable about that one is, based on the reported numbers, that multiple based on their earnings, that price that was paid for DRB in an all cash transaction was a multiple in excess of 22 on EBITDA. So just now, it's a technology company, but still it's in the car wash space, and just, gives you again a sense of the aggregate interest and demand out there for car washing. So isn't everybody sick of this stupid image, by the way? I don't know. I mean, it's COVID. I had to search for something, but we're so sick of looking at this stupid thing, but it is what it is. I hope you'll apologize. You'll accept my apologies. But here's, I think, another reason why you saw some of these transactions and so much of this activity is, oddly enough, I mean, and we're not the only industry, but we're probably in the minority. It was an accelerant for car washing, what happened with the pandemic. So as a friend of mine in the business said early on, he said, "Thank God that I'm in the drive-through cleaning business." And when you think about the express conveyor market in particular, that's really what you're able to provide. Incredibly valuable during a pandemic. You don't have to roll down your window even. You can be recognized by RFID or license plate recognition. You can just spin on through and get your car clean. And, get both, that ability to stay open, that ability to make the customer feel safe and secure, but then also just the aggregate population getting much more comfortable with contactless delivery and, everything being clean and take care of it yourself sort of an idea, we think has really accelerated adoption and comfort and even honestly some joy with the car wash experience. I mean, there was a time there where the movie theaters aren't open. You've worn out everything on Netflix. You're not going on holiday with the family. So, anecdotally, we heard a lot of stories about, I'm just happy to go through the car wash for some kind of an experience to get out of the home. Certainly the recurring revenue model and the fact that it's sustained through the pandemic, through the job losses, which admittedly really was a 30, 60-day cataclysmic job loss that's largely been building back. Employment's been coming back, but generally speaking, subscriptions held on. That's become such a powerful part of the car wash model, again, for the exterior express in particular, that recurring model proved itself, at least through this pandemic thus far, to being durable, made it more attractive for investors and new people coming in. Then there's this idea of, if you own commercial real estate or you're an investor in retail, those weren't the greatest sectors to be in 2020, right? Or during a pandemic. And there are slices of it that have done all right, but the car wash industry comparatively has done incredibly well in those sectors. So again, got lots of attention. And then there was just the idea of, there still remains, and I couldn't quote to you the exact figure today, but I think it's a global phenomena with the amount of capital that's on the sidelines, not in the public markets, that's available and wanting to find a place to go and park itself with globally low interest rates. And so the car wash industry, again, sort of shone through all of that period. Okay, let me show you a few, if you would. These are statistics now that ICA has gathered, that the first one of which we just, pardon me, we just gathered last month in June. So we've been doing a consumer study in the US since '96. And what was notable back then was when we asked owners of vehicles whether they most frequently washed their car at home or they went to a car wash, the majority was did it themselves. So DIY, do it yourself most often, was actually, those are juxtaposed. I just realized that. What the hell? That should say 52% on top and 48% on bottom. But the theme is more people did it themselves. That number has been in consistent decline every time we asked it. We normally were going to wait until 2022 to do our next consumer study, since they happen every 3 years, but we did one last month just on this question. And that number is now at 80%. Now, this isn't because of COVID. This has been going on for a long time. I think, it's like a lot of countries, as age and affluence and just lifestyle is more toward do it for me. But what's good to see is it remained, again, durable during the pandemic. People didn't change their behavior to wanting to do it themselves. And to be honest, I mean, this is one of those questions where it's almost getting to the point where the do it yourself at home car wash person is almost like it's a mythical enemy. I mean, it hardly even exists anymore. If you have a classic or antique car and you're washing it with a cotton swab in your garage, more power to you. That's a niche we're probably never going to convert. But for the general population, if you now extrapolate and think about the number of people and population growth and vehicles on the road, aggregate demand has grown massively for car wash services. Okay, so this one here is interesting because this speaks a little bit more to the pandemic period itself. So we started doing what we call our pulse surveys early in the pandemic. You can see the first one was done there in April of 2020. And what we asked car wash operators was, give us your sense. This is a positivity rating, okay? So the figure speaks to, I'm feeling positive about the conditions. And the blue line is I'm feeling positive about now. And the orange line is I feel positive about the prospects 6 months from now. So what you've seen is perhaps no surprise, but it maps with, especially with all the news I've already shared with you about sales and demand, but you're seeing a consistent increase in optimism from operators, pretty much so every time we ask the question through the pandemic. Now, what's even more interesting is going to be the supplier figures. I mean, we're talking like at the 95th, 93rd percentile is positivity. I will tell you, for those who are suppliers of car wash equipment for the tunnel segment, it's 100%. I mean, there's no one who filled out the survey who had anything but positive things to say about how it's going right now, other than supply chain. So in terms of the health of the industry, it's just incredible where sales and people's view of the future and view of today is, based upon the most recent data we have available. And then finally, finally, I just want to share sort of some other themes and topics that are out there. And then, I'll be happy to go through again any questions you've got or expand upon these. So some of the other chatter that's out there, and just if you asked 50 car wash operators or suppliers, here's some of the stuff you're going to get. First of all, growth capital, it's ridiculous. If you are someone in search of financing, either it's debt or equity financing, there have never been more choices. The number of companies now that are even specializing in the car wash market for debt financing, and the number of private equity folks willing to make equity investments in the car wash industry. I mean, it's there, you can get as much as you want. It's a buffet of capital right now. It's absolutely crazy. Number two is this idea of sort of rising multiples. I mentioned to you, the reported upon multiples for the DRB transaction. Now that's probably a little more of a strategic acquisition given the acquirer, what their business is. But, consistently now, car washes are trading at what used to be 6 or 7, probably 5 years ago now, are closer to normative, maybe to 9 to 10. Strategic acquisitions are happening, I'd say at 11, maybe 12. as a multiple on earnings. So those multiples are quite strong, which, by the way, is what is causing some of the interest in greenfield development, right? I mean, there's now so many acquirers chasing the independent operators that, of course, multiples go up, the price goes up. And so for some of these larger groups, the idea of developing car washes on our own, even though it takes more time and it's a very different level of expertise, it's being invested in quite substantially. The other thing is, what's happening in the car wash market is the tight labor supply. Maybe problem number one right now for car wash operators is finding labor and holding on to it. Help wanted signs are everywhere in the US for every type of business, particularly retail. So it's incredibly hard to hold on to people right now and find them. In the US here, the federal government has made for a period of time some augmented unemployment benefits. So in the US, unemployment is generally handled by the states. The federal government put a booster on top of the state budget for unemployment benefits. Those benefits are expiring now, as is expiring the moratorium on evictions. If you haven't been paying your rent, that's going to be ending this month or perhaps September 1st. Maybe it's 30 days from now, roughly. So those things will probably help the labor market, but right now it's incredibly hard to find and hold on to labor. I would say that from an operator perspective, the moat building of subscription plans remains the number one marketing focus and sales focus of retail groups. The idea being, I'm going to try to get as many subscribers as I can. I'd like to be at 2,000 to 3,000 subscribers in my first year to 18 months if I can. I'd like to get to 5,000 subscribers a store if I can, as a great sort of medium term or longer term goal, because I believe that'll make me more defensible when someone comes into my market. So you're seeing a lot of focus on that. That's been the case for a few years. Another one interesting a little bit is this idea of hub and spoke development. There's some examples of this, but it's not all just exterior car washing. So when I speak of hub and spoke, there's a little bit of, we're seeing some examples of people taking the strategy of, I'm going to have, let's say, 5 exterior car washes, and then I'm going to have a full service somewhere in the geographic proximity, because that adds some value for the customer. So my customer, when they want to get a full serve, as opposed to having them go somewhere else and possibly losing that customer or losing those dollars, I'm going to complement my exterior washes with having a full service car wash, or at least a flex service car wash. So we're seeing that idea perhaps gain some traction, which really too involves different than interior cleaning of old. We're seeing a lot of attention around the belt conveyors or even traditional conveyors, any way to operationalize and make more efficient interior cleaning. And the belt conveyor is probably leading the way on that for interior cleaning to keep labor moving and keep the car moving and processing. I mentioned already this idea of too many stores or too few stores. The term that a lot of the equity and investor groups are using quite consistently is that the car wash industry is understored. I didn't even know what that word was, by the way, but we hear that all the time now. You're understored. Well, compared to what? Well, compared to retail food, compared to self-storage, compared to whatever. That's how a lot of outside investors are looking at the car wash market when they look at the installed base of stores, and they do extrapolation based upon population. They do extrapolation based upon vehicle registrations. There's this refrain of we're understored. Again, we shall see. Supply chain constraints I've talked about, which is related to price increases. It's a real challenge right now to get anything built. Homes to get built, to get furniture delivered, probably a global phenomena. Certainly for car washes, maybe the only thing really constraining further car wash development right now is just lead times. And it's not the permitting process any longer. It's going to be actually getting, the labor, the materials, getting on the production calendar for your suppliers. That at the same time is causing a little bit of anxiety and some angst in the operator realm about choices. So if everything goes to 3 platforms or goes to 1 platform, what are my options as a car wash operator, right? Do I have to just take the price increases that are passed along by the market leaders now, or where am I going to find other options? And so I would expect, I mean, if the Adam Smith theories of the world still hold true, that, you know, the invisible hand will get involved here at some point, I would expect to see perhaps new providers getting in. There's a couple of examples of that in the last 2 to 3 years of manufacturers trying to come in and provide at least a niche sort of line of products that they can deliver to operators. The challenge for them is probably, you know, being able to service nationally takes a heck of an investment if you want to install or service across the country. But maybe we will see new suppliers come in, new manufacturers, and maybe even regionally, you know, given what, again, distribution requirements are, which is related to the consolidation there. And then what I want to end with and emphasize is it's not just, by the way, so I'm not misrepresenting, when I go through the top 10 list and it's all private equity, let me not leave you with the thought that there aren't, you know, sort of people that don't have suits and briefcases on walking around at the trade shows. I mean, there are regular operators still everywhere. And in fact, you know, that has picked up as well. I mean, the number of inquiries we're getting, the stores that are being built by smaller groups. So I'm saying private groups that come together, they're not backed by a private equity fund or something out of New York City. That is also exploding. But what's interesting is, whereas if I go back 1,000 years ago when I entered the car wash industry back in 2006, very common, in fact, almost exclusively when we would put on new investor seminars or someone would contact us about getting into the industry, it was oftentimes a doctor, a lawyer, somebody who had a different career. They've saved up a bunch of money. They want to open a car wash. And that's when you could build an express exterior state-of-the-art car wash, perhaps for $2.5 million all in. Those days are gone. So in terms of the cost for a store, I mean, regularly now there are express car washes being built for 7 million US. There are car washes being built express that are 10 million US. You know, that's not uncommon anymore. It's not the norm, but it's not uncommon. So at those numbers, what we're not seeing anymore is the private person coming in, like husband and wife who want to come in and open a car wash, because of the price tag, but also because of the competitive situation, where if you're coming in to build one car wash, you better be ready for someone coming in and building 5 in your market, right? Just because of this idea of a subscription moat around yourself. So either if you're going to build one, you better find maybe an outlying area where the population's coming towards you. And over time, with success and cash flow, you can build 2, 3, and 4. Because if you're going to try to build a singular car wash in a market, you either already may have subscription customers surrounding you, or you should be ready for someone to come in and build several stores in rapid succession around you. So that dynamic has changed it for the individual investor looking to do one. That's becoming a rarity. Okay, that's it, my friends. That's at least about as much as my voice might have available to me. I've got 10 minutes, I think, still on your calendar, but I'm available to you, and I'm happy to answer any questions or expand upon things. And again, just happy to be here with you all, and I hope this was somewhat interesting and maybe useful. Thanks.
Look, thanks very much, Eric. That was fantastic. Very much envy you from a association perspective, having access to that information you were able to pick up through your research, and I really enjoyed it. I did send everybody a chat just saying, please feel free to unmute yourself and ask questions of Eric. Any question you like, whenever you're ready.
G'day, Eric, it's Rob. I'll start off. How are you?
Hello, Rob. Good to see you.
Just a quick one. So the trends that you have seen, obviously in the US, are fantastic from observers here in Australia. The numbers, the volume, etc. Have you seen that replicated in other countries, or are you aware of that same success that the US has had, like Canada, Europe? Are they seeing the same growth? And because I'm just trying to relate that to Australia, and there's quite a few differences in Australia. First of all, we're all centered around major cities. Our land is very expensive. We can't build sites the size of the US in cities unless you're a billionaire, because the land's so big, so expensive. So what have you seen trends in other countries? What's happened there?
Yeah, I just, we have some partners in Europe that we do a trade show with and connect with the association leaders there. I just had a chance to connect with some of them last week. I think the difference would be the velocity is not as fast, and the rate of change is not as fast. And I'm going to particularly speak to like the German, the Dutch, the sort of France, etc. And I think there's two things happening. One is the general trend toward independent non-petrol, because the European market is dominated by petrol. The independent operator, and included in that would be small private equity or private money owned groups. Their rate of growth is faster than the petrol market as a percentage of growth rate. They're growing faster than petrol. In fact, in Germany, the number of petrol stations is going down. With that, by shadow is going to be the car wash, the installed base of rollovers. So like in Germany, as an example, in the Netherlands, you're still seeing more of the market and more of the growth is happening by share in the private side. But the difference, I think, has been that the pandemic and some of the lockdowns and some of the slowdown in commerce and activity was a little more pronounced than the US. So I would imagine what if the US market was looking like this, and then we had a little bit of a dip from COVID and then we took off, Europe might be a slower slope, a lower slope, a dip, and maybe a slower recovery. I haven't, though, seen anything that would tell me the European market has reversed course, where independent investors aren't interested in the car wash model outside of petrol. I haven't seen anything that tells me that the express model is becoming less popular. I think it's becoming more popular, but the rate of change wouldn't be like the US market. And in Canada is more like Europe than the US. It's still more of a less conveyors as a percentage. A lot more of the volume runs through rollovers. A lot more of the volume runs through petrol stations than in the US. So I'd say probably similar in that regard.
Okay. Yeah. And do you have an observation on Australia with your information? Would you have an input in saying, what you feel Australia could do or is heading as an outsider? Can you see anything that stands out?
So you're going to ask the American to tell 29 Aussies what they should be doing? Is that?
No,
haven't you had
not at
enough
all.
of
I just
that
want
by
to see
now?
your observation. I want to see if you're seeing a trend line that we don't see.
I think all of you would have much better information on what's happening there. I mean, it seems as if this is from my last touch point, last time visiting Australia, which seems like 100 years ago, that I know that the dynamics of the in-bay rollover, self-serve, exterior, express market, that's still not gained the traction even of the European market. It seems like Australia might be behind Europe in that regard in terms of growth rates. So I'd be hesitant to prescribe anything to you or pretend that I know better than you do, Rob.
Thank you.
Rob, I might be able to answer that. Well, there's a number of private equity companies doing similar to what's happening in the States, but in a lot smaller scale. So the trend is for people to buy multiple sites. So, but more so on the autos and self-serve sites more than the hand wash market. But certainly the tunnel wash market is certainly taking some traction from what we're seeing in our development arm as well. So which you're well aware of. So so on a smaller scale, but it's interesting. While I'm there, Eric, great presentation, mate. Once again, what's the ICA Expo next year in America? Are you hoping that that'll go ahead, and when are you hoping that's going to be on?
Oh, thank you, Greg. It better go on, man. We can't do this forever with no trade show, as you know from the association business. Sure. So we are opening our trade show November the 15th of this year in Las Vegas.
Okay.
So we've postponed it a couple of times. I mean, we all know about the Delta variant, and there is an uptick in there's an uptick in cases. There may be an uptick in kisses too. I don't know, but there's an uptick in cases. but not the fatalities and such. So I don't expect that that's gonna, we're gonna see hopefully the restrictions like we did last year. So that will be 915 days since we closed the last show. And then in 2022, we're gonna have the show in Nashville in May.
In May, okay.
Yeah.
Eric, what's take up been like for? I mean, I know you're obviously positive about it, but what's take up been like for the show in November?
Well, registration actually opens not next week. It'll start opening for members on attendance. On the exhibitor side, I can tell you it'll be sold out, I would expect, by the time that we're all together in November. Now, thankfully, our suppliers have allowed us to keep their deposits on account with us ever since the show was canceled last year. So we haven't even sold them anything new hardly since 2019, the spring of 2019 at the last show. So we just rolled everybody forward, and we're still getting, new entrants coming in with all of the attention, with even the Mr. Car Wash IPO. We're seeing new companies come in, and honestly, that's where I think it's incumbent upon us to find those companies and do a good job of helping them. But I think we're going to see that the trade show even environment for the car wash industry is going to attract more and more of the types of companies that have professional services and marketing and human resources and technology and finance than ever before. I mean, you already can come to the show and see all the manufacturers. They're all there. Now what we're seeing is that sort of next tranche of supplier. It's a company that they also happen to sell to car wash. Now they're getting interested in the industry.
I think, Tony Young, you had a question. Do you want to just unmute yourself, Tony, and ask that?
There we go. Thanks, Eric. Great stuff. Years ago, I was over in Grand Rapids in Michigan and visited the Tommy office. And in the executive bathroom, they had a copy of Blue Ocean, Red Ocean. I'd never read it before, and came back and read it. So I'm just inferring from your comments there, Eric, that it could end up that way, in particular in some states in the US. Obviously, that's some time off for us. But how do you feel? What's your sense of how it will all end up?
Yeah, I don't pick up books in bathrooms, Tony, so I don't know how that story went. But I know Blue Ocean strategy. But good for you to be a reader. Anyway. It's a big question. I mean, I wear two hats, right? There's a car wash side of me, there's an association side of me, and there's ramifications beyond just what happens to the industry sort of statistically. There's also the culture and the community of the car wash industry and the spirit, even call it, of entrepreneurialism that has allowed the industry to get to this point and reinventing itself, et cetera, et cetera. So, I think that I don't see a place where the car wash industry becomes unavailable to new entrants. I mean, I look at the retail space, and I mentioned to you earlier, self-storage, and I think about the retail food business. This is still a business that is local largely and convenience driven. And so I feel like from that realm, it doesn't require having a national brand per se, and it can still afford someone who is focused on customer service excellence, being able to successfully deliver to a local market. But you can definitely see, if right now we think there are 2,000 of the car washes that are consolidated of 20,000, it's 10% consolidated. You look at those other industries and anywhere from 40 to 60% consolidated in other retail segments. So if we got to a point where, let's say that half of the industry at 30,000 car washes were consolidated, with 15,000 of those owned by a handful of publicly traded companies, it's a very different culture. It's a very different culture of new entrants, probably. The good news is, if you're an incumbent, you have more people than ever to sell to. You have more exit options than you ever had before. And I think too, and we're already seeing this, the other good news is that you're getting new talent, new ideas, new perspectives that come from outside industries. I mean, I even think about the marketing prowess of retail car washes. You know, when I started again in 2006, hey, what are you doing for your coupon mailer? That was about the extent of most people's marketing, outbound marketing strategies, if they had one. Now it's, you know, digital, social, integrated, inbound, all sorts of more complex on the vendor and operator side. So I think the good news is we have a lot of growing up and a lot of upside to gain as an industry. You know, revenue, talent, ideas, the look of the stores is better than ever. I mean, it's just beautiful looking stores being built. But I'll admit, I'll confess, there's a part of me in my heart that, oh man, I really missed the old gang, right? You know, I mean, it was a family industry and still is largely, but that's really changing fast, Tony.
That's great.
I don't know if
Thanks,
that
Eric.
helps you. Yeah.
Yeah, thank you.
Eric, I've got another question. With the developments that are happening in the States at the moment, what add-on businesses are they having on the sites other than just the tunnel washers? Because we're doing a few developments at the moment, and we're adding laundromats, which I've been involved with now. I've got a few laundromats and at car washes. Are you seeing that? Because I know that industry's exploded throughout, not just Australia, but through the world. The laundromat industry, it's gone really well, especially with the Dexter machines, seem to be going very well. Is there anyone doing that in the States? And drive-through coffee and obviously tunnels go very well as well, or even with just our rollover and autos self-serve sites as well.
Yes. Yeah. In fact, there's a friend of mine is the head of the Coin Laundry Association, trade association, which is based here in the suburbs of Chicago as well. So he and I compare notes all the time on the laundry space. And you're right, that is accelerating quite a bit. I haven't, where I've seen, call it ancillary businesses with the car wash. And again, I'm going to share with you it's not that I'm biased in the express model. I'm just going to say, if there are 10 car washes being built in the US right now, 9 of them are express exterior, and the 10th one is maybe a flex serve. I mean, there aren't many of the rollover in bay or full services being built. So that being said, where there is ancillary business being added, it's a little more on that hub and spoke model, the idea of having a flex serve car wash where I can do on the side interior cleaning. Generally speaking, people have fallen so in love with the simplicity of the express model, the operators have, that they don't want to do anything to gunk up the gears. You know, they don't want to do anything that slows down getting people onto the lot and getting people off of the lot fast. So anything other than that, particularly for these platforms, is a distraction. Now, that being said, I do think, just like with the idea of having a flex serve and hub and spoke, those types of ideas can be differentiators. And I think one of the risks for the market is when let's say your market becomes all express exterior car washes that offer about the same thing at about the same price, what are you going to do to make yourself different but cutting your price, which nobody wants to do? And so I think some of those ancillary products, whether it's laundry or pet wash or whatever else it might be, might be some of the ideas that we see coming next.
Yep, sure.
Eric, if I can ask, thank you very much for your presentation. I was just wondering, are the gas station chains still investing in car washes in the US, or is it pretty much moved out of the gas station chains into more the private independent operator or the private consolidated operators?
Yeah, good. Thanks for asking that, because it'll help me give context. Again, there's so much activity in the tunnel. I don't mean to suggest there isn't elsewhere. And so to your question directly, I mean, the major really are the convenience store groups, the Circle K's of the world as an example. They're very much still investing in car wash, and they're increasingly, when they're building a car wash, it is going to be at least a short tunnel conveyor, if not a moderately long one, almost full size, where they have the chance. So in general, petrol sites, gas stations, C-store platform are becoming larger pads. Very rarely, no one's building a gas station any longer that has 6 pumps or 9 pumps or 12 pumps. It's going to be 30, 40 pumps. It's going to be a full, full width of the lot convenience store with behind it, a full as best you can car wash, not even just an automatic behind the store anymore as the standard model. So yeah, they're seeing the same thing. I think that generally speaking, still the bulk of the volume is going to be on the independent side, just because of, that's the focus of the lot. Typically, car wash still is the third thing that the operator of a petrol station is worried about: gas, convenience, then car wash. But they're seeing the same dynamics. They're seeing the opportunity for revenue. They're seeing the opportunity for traffic. They're seeing the opportunity of subscriptions. So if I go by one of the nearest gas stations to me, they're advertising their unlimited wash program on their app, and it's advertised at the pump for the customer.
Thanks, Eric.
Yes, sir. Good to see you, Dave.
Just talking about those, the service stations where you said there's 40 pumps, what's happening in the electric car market over in the States, given that they're increasing the size of the pumps, whereas is there any traction with the electric cars, and what are you hearing over in the States, mate? Yeah,
in fact, we just had a presentation, I think it was 2 weeks ago. We have an automotive consultant who gives us sort of a lay of the land and what's happening with vehicles. Greg, it looks like two trains heading at each other on the same track whenever I see it, because you're right. These convenience store petrol stations are getting massive, and the investment has picked up in those. And they're not being built that I'm seeing with an electronic charging station there at the site. At least contributing to that is because of the time it takes to charge. Nobody wants a car there for 45 minutes, so they want to move them. So the petrol stations are getting bigger, and electric car sales, although still small as a total, you can't ignore the fact that General Motors and Ford have announced that they want to be by 2030, 2035, all electric. Ford is coming out. The best-selling car in the US for the past 40 years is the F-150 pickup truck. The F-150 Lightning comes out next year, which is an all-electric version of the Ford standard work truck F-150. That could be a real game changer, taking electric from just being novelty to being mainstream. So that'll be really interesting. But I wish I was smarter and understood what all those smart people were doing. But and probably what they're doing to some degree, Greg, is they're trading market share, because the small stations are going away. So a lot of what we're seeing is, again, these 9, 12 pumpers, those are gone for these mega sites under bigger brands with full convenience stores is probably part of the strategy.
Eric, just in relation to the $5 and $10 million developments that you mentioned, I'm assuming that includes land value, and if so, what kind of ratio is there between the increase in land value, or is it just a bigger, better site? And second question is, with the acquisition market suppliers making more acquisitions, or private equity companies making private acquisitions of suppliers, the rumor through, let's call it just Facebook Talk Car Wash, is that that's actually resulted in a diminishing service delivery.
Yeah. Well, to the second one, that does speak, there's I mentioned, I think I said, anxiety amongst operators on choice. And certainly there's a customer service conversation that you're seeing happen around, hey, these consolidators, it all sounds great in a press release, but now I can't get my stuff. The only thing I would say is, I don't know that the consolidation is causing the delay in getting your stuff, because it's happening everywhere. I mean, even those who haven't been acquired or have bought are having trouble with delivery times, getting raw materials, finding people to do installation, manufacture, fabrication. It's really hard. So, I mean, but as an example, my wife's in the interior design business, and right now they're telling their clients, we would hope to have your couch by Easter. I mean, that's what we're talking about, to get a couch. I mean, so as an example of just how stretched out and thin the supply chain is right now. So give those folks some credit. And I'm sure there are some real pains, by the way, with consolidation. And certainly there are some people who aren't executing as well as they'd hope, but it's a real supply chain challenge. To your investment, to the, you know, how much of that is just the land cost? It'll depend upon market. The old it depends answer, but I would say this: it's the cost of the car wash, forget the dirt, that has outstripped the increase in total project cost. And some of that is price increases, sure, but some of that has been just the what a contemporary competitive car wash is today versus what it was 15 years ago, even in terms of technology, in terms of architecture and the look of it from the street, security, anything internet enabled, remote monitoring, except there's so much more technology and look into and investment in the visuals of the store to make it look beautiful and pretty and all those kinds of things. It's the cost of what's above the dirt that has actually exploded more than the cost of the land itself.
Very good.
This is usually the time that somebody comes on and tells me what I got wrong and has all the other answers. So I'll happily jump off before that happens, Doug.
There might be some other questions, Eric, but just one of the things that occurred to me, and I thought I'd just say while there was others on the line, is that in terms of what the ICA's provided us during the lockdown has been fantastic. And I'd like to say thanks to your team for, and especially Matt Wulf with what he's done with the podcasting. I think it's been incredible. I've spent a lot of time driving in recent times, and there's a huge amount of information available via that avenue, and that's been really useful. And that's why this sort of concept is also a great platform for us to share information. But what you've done with the podcasting, and I guess you've had to pivot the business a little bit in the US, or quite a lot with COVID, and that's certainly one of the benefits that I see has come out of it, is the way the information has been delivered has changed.
Well, that's kind of, I'll pass along those remarks and that to Matt directly, Neil. Thanks for saying that. And yeah, there's nothing like, I mean, the market's changing in terms of who's involved. We talked about that with consolidation, et cetera. But there's nothing to spur innovation like losing 93% of your revenue, So when the trade show gets canceled, you better do something. So it's probably not turning the dollars that the trade shows do, but I just think in terms of keeping the connectivity between the market, it's been really, really well done. So I think well done to your team for doing that. And I know that there'll be a number of parties that are on this call that probably listen to it as well. But we must. It is a thing that we should be promoting more just within our own constituents as well, because there's a hell of a lot of information that comes out of that that'd be really useful for everyone, and particularly keeping an eye on the market that's obviously moving way faster than ours and is possibly 10 years ahead of where we are. If you're not listening to that, you're really not interested in the industry, I think. Well, thank you. Yeah, and part of that too, Neil, the reason for doing some of that also is because what we are seeing is there's so many more ways, of course, to connect now, right? We've already talked about Talk Car Wash, and we have Zoom, and we have all these things, but there is a flood of new people in the industry, right? Who don't have any context and just, they come from other industries who are investing, or they're now new suppliers or acquirers or whatever. And generally speaking, those folks turn over a little more quickly than used to be the family business that good luck getting out of it. This is the family.
Yeah.
So we're seeing, new people come in all the time, transitioning in, transitioning out. And so, being available to new communities is going to be, I think, really important for associations.
Yeah. So Doug, I'll give it back to you to close if you like.
Look, once again, I guess, thank you very much, Eric. It was a terrific presentation and a great way for us to kick off Waxing Lyrical, which we hope to be able to run for everybody every month on a different topic line. We have a number of topics that we plan to bring. If anybody, in this cohort of people would like something specific, just please let us know. Eric, just before you go, particularly with the group of people that we have online, I just wonder if you could quickly mention your lead program and the opportunity that that presents for people, particularly in light of this situation with potentially people moving around, not staying as long in business and trying to keep hold of people.
Yeah, well, thank you. Thanks, Doug. That's for that tee up. Yeah, if anyone is interested, I'd be happy to. I shared my contact information a moment ago. Reach out to me any way you'd like. In January, we launched a program we call LEAD, which is an online manager training program. We'll eventually be issuing certified car wash manager credentials to employees at car washes. And so what we're offering right now, we have 22 different courses ready to go in the talent management category. So this is all about how to manage your people, how to develop your people, everything from recruiting to discipline even. And that's all available online. And so we've right now got, I think, about maybe 60 companies. I don't know how many locations, a few hundred locations participating. So literally hundreds of managers, assistant managers, district managers, whatever, taking those courses. And we've gotten really good feedback thus far. You can see some examples of it on our website, which is carwash.org. But yeah, we think the timing of this was good in that it is online, and also the labor situation has become so important for operators to hold on to good people. And so we were happy to bring these courses to the retail environment to help develop and hold on to your best players.
Thanks, Eric, and thanks, Robert Sacco, for your article on the LEAD program in the newsletter, which we've recently sent out. So thanks for that, and thanks again, Eric. Fantastic presentation. I really enjoyed it. Thank you.
Thank you all. Take care.
I'll tune out. Thank you.
That was interesting. Changing that, like everything.